Hello traders, welcome to the video. So in this video I will show you how you can easily use this indicator you see over in my screen here to trade the retracement of candles and also to catch spike to the upside in both the boom and crash market. So this strategy is applicable to boom and crash 1000. You can also test out the 900, but I trade it most with the boom and crash 1000. So if you look carefully on my chart, this is 1 minute time frame and this is boom 1000. So the time frame we use this strategy is the 1 minute time frame. So you don't require going to higher time frame, although if you go to higher time frame to confirm the direction is also fine, but you don't need to go to higher time frame, but you can just select everything over here and take your trades. So basically everything I'll be saying here in the bull market is applicable to the crash market. It's just that it is opposite to each other. Don't worry, I'm going to show you one or two examples in the crash market. The retracement, you will be able to catch 10 easy candles. So first let's talk about the spike before I show you the retracement. So the most important thing is the zoom level. For the zoom level, you zoom out to the uttermost zoom. You can see I zoom out now. So this is the best zoom level for this strategy. If you look carefully on my chart, I have just 3 indicators. I have the stochastic oscillator, which mark out these levels, and I have the Ichinmoku, which is inside the stochastic and also on my screen. So the Ichinmoku on both screens helps me to follow up the market and get a more perfect entry. As we all know that the level above the 80 and 85 is the overbought level, and we know that once market enter this level, it is likely to sell to the downside, and the level below the 20 and 15 is the oversold level. Anytime market enters this level, it is likely to buy. So first, let's talk about the bull market. So you can see over here, we see how this Ichinmoku moves down to the downside, and also on the stochastic oscillator, we also have it enters into the 20 and 15 level. So once you have the entry, you will wait for when there is a spike, a very long spike that break the last swing high and also break the Ichinmoku. So it is 2 breaks, break of the Ichinmoku, breaks of the like swing high. So you can see over here, when market retrace enters this level, you have a spike but did not break this high. So you wait for the second spike that break these 2 highs. So once you have that, you will enter your buy immediately. Your stop loss will be below this low. Then you hold your trade until when it enters into the 80 and 85 level. You can see over here, market spike to this point. So the good thing about this spike cashing is that once you are taking out, it will respect your stop loss, so you won't be losing much. So let me show you more examples. You see over here the same thing all over again. You see how the Ichinmoku and the candles have been going down, enters into the 15 and 20 level. So if I zoom into that, you have the entry here, you have a spike but did not break this high. Retrace again, then you have a spike that break this high. 2 breaks, don't forget that. You enter your buy immediately, your stop loss will be below this low or this low. It all depends on you. Then you hold your trade until when it enters into the 80 and 85 level. You see how accurate this strategy is. Here is also another one. You can see over here, market is going down and also going down to enter into the oversold level. So over here, you might think you have a touch, but it spikes up but did not break any low, so you have no trade. So you wait until when you have a perfect entry. Spike up, did not break any low. And if you zoom in very well, spikes up, break this, you enter your buy immediately, stop loss below here. You see how market continues to spike until when it touches the 80 level, where you will close your trade. So now let's talk about the retracement. So like I said, the 85 and the 80 level is the retracement level. So we want to see the Ichinmoku enters into the 80 and the 85 level. Then we look for entry around this point. So let's use this as our first example. You see a spike to the upside, did not enter the 80 level, spike and enters into the 80 level. Then you wait patiently for when it crosses the Ichinmoku. Once you have the cross, you wait for a candle closes below. This is the first candle. You enter a sell and count 10 candles. Here you don't need to cash 5. This is showing you how accurate this strategy is. You can go for 10 candles if you want. So this is it, 10 candles delivered. So let me show you more examples. So here is also another example. You see how the Ichinmoku enters the 80 level, which is telling us that the market is now overbought. So once you have that, you have the entry here. You wait patiently. You have a crossing the Ichinmoku. You enter a sell after one candle. Then you count your 10 candles. You see how market delivers 10 candles. Then after that, you have another entry here. Also delivers 10 candles. You see how accurate this strategy is. So let's go to the crash market and let me show you one or two examples before I show you settings to my indicator. Crash market. So everything we are looking for here is basically opposite to what we are seeing in the bull market. Over here, you zoom into the maximum zone. So once you have it, this is the maximum zone level. If you look carefully, you see how the Ichinmoku enters into the 85 and the 80 level. So here we are catching spike. We are focusing on the 85 and 80 level. But when we are tracing the retracement, we are focusing on the 20 and 15 level. So if I zoom into this area, you have a spike to the downside, did not break any low. You have a spike that break this low. You enter a sell, stop loss above this high. You can take it a little bit higher for safer side. You have a spike that confirms this one, also breaks below, retreats, spike, and then spikes until when it enters into the 15 level. See, from this level up to this level, you know how many profit you will make even while using the lowest lot size. So now let's quickly touch about the retracement. As you can see over here, we focus our attention on the 20 and the 15 level. See how the Ichinmoku enters into the 15 and 20 level. We wait for the cross of the Ichinmoku on the main chart. Close of one candle, enter a buy, and count your easy 10 candles. You see how market delivers it. So the good thing about this strategy is that the Ichinmoku indicator compared with the moving average, it helps you to avoid fake out and give you a very more accurate entries. So now let me show you settings to my indicator. First thing you do is to click on this indicator icon over here. Like I said, I have just 3 indicators. I have the Ichinmoku, stochastic oscillator, and Ichinmoku. So for the first Ichinmoku, click on the F icon on the main chart. Ichinmoku. So I cannot actually pronounce this thing, but you can screenshot them if you want. This one is 9, this one is 26, this one is 52. Don't feel it. This one, make it 3 pixel and select color of your choice. The remaining ones, make it 1 pixel and select color of your background. If your background is black, select black. If it is white, select white. After that, click on save. For the stochastic oscillator, click on the F icon on the main chart. Scroll down, stochastic oscillator, click on that. Make all these ones to be 1 pixel, decay, D, and slowing. The feed price, make it low, high. Method simple. Styles, make it 1 pixel and select color of your background. For the levels, click on this pen icon. Click on add to add level. Type 15, 85, 80, 20, and 50. Style, make it 2 pixels, select color of your choice. After that, click on save. And for the last indicator, which is the Ichinmoku, click on the F icon on indicators Windows 1. Ichinmoku. Make this to be 9, 9, 52. Don't fill. Make this to be 3 pixels and select color of your choice. Also make this 1 pixel and select color of your background. After that, click on save. So you can screenshot the indicator settings and set up your chart later. After this, I want you to go back on your chart, backtest this strategy, and try and trade it with your demo account. Test it for at least 2 to 3 weeks. Then see how profitable you will be. After that, you can decide whatever you want to do with this strategy. If you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.